These are very, very, very painful moves. And this is a huge one. One of the things that happen 100% of the time around currency regime shifts is war. And that's why it's so critical to be prepared. Things are happening that we can't see. It's going to either be a hyperinflationary or hyperdeflationary. So there's a lot of pain ahead if you're not paying attention and you're not prepared. 80% of the population ends up in abject poverty. The last thing central bankers want you to do is buy gold. Like if they were going to do an overnight reset tonight, it would be easily in excess of $15,000 an ounce. Everything has a life cycle, so why should monetary systems be any different? Where we are today is quite simply at the very end of this currency's life cycle. It's done, it's game over.
Hi folks, Canadian Prepper here. It's an honor today to have on the channel Lynette Zhang, who's a chief market analyst at ITM Trading. She's been a banker and stockbroker and studied world currencies since 1987, a very important year in the markets. And she has a very popular YouTube channel. I'd encourage you guys to go check it out after this interview, and was recently hosted on Kitco News, among other very prominent YouTube channels and media agencies in the financial space. Now, one of the reasons why I wanted to have you on today is that you have a knack for explaining very complex economic ideas in very simple terms that people can understand. And I know we were talking just before we started here about the fact that you have a bit of a preparedness background as well, that's in part motivated by your awareness of what's going on in the financial system. So I'm hoping today that you can give my listeners maybe just an introduction to how exactly our financial system works, how it's structured, and why it's so flawed at the core. Because I think many people intuitively get the sense that something isn't quite right. It's serendipitous that we have you on during what may be a black swan week in 2023 here with respect to what's going on in the banks. What's going on with this banking crisis, and how is it a sign of a sick financial system?
You've asked me a bunch of different questions inside of this.
I know.
First of all, I'm going to say thank you for having me, Nate. And I would say too, that people need to understand that things are made intentionally complex, because then what happens, most people go, well, I can't understand this, but they certainly must know what's going on. They do that so that you don't question them. But in order to really understand what's going on, I think you have to strip everything out and go right to the basics, which is what is money. And money originally was pitched to everybody as a way for the society to specialize, right? So you can have a banker, you can have a farmer, you can have a lawyer, etc. And they've tried lots and lots of different things as money, but only gold meets all of the criteria. So the original criteria is as a tool of measure, a tool of barter, a short-term store of value to ensure that you are fairly paid for your labor, and a long-term store of value so that no matter when you use that money, you are still being fairly paid for your labor. It's pretty simple, right? But it created two challenges, one for governments and one for corporations. For governments, they wanted to tax you. But when we were on a gold and silver standard, if they did that, you'd know about it. And you had the ability as a population, you had the ability to walk in with this $10 gold certificate, if you didn't like what the government was doing, you'd walk into the bank with this and you'd walk out with this. Well, this is actually a $20 gold coin, so it'd be half the size of this, right? Therefore, the public had the most control because it would restrict how much debt the government could issue. So you, the citizen, could pull it out of the system. So the government wanted a way to tax you without you knowing about it. not having to go through legislation, not having to make it obvious. For corporations, they wanted to pay you less. But hey, if you're used to getting $10 an hour, you're not going to accept 5. However, if you could make that $10 spend like 5, well, voila, then you didn't get any pushback. So they transitioned us in 1913 into what's called a fiat money system. Fiat means by decree. So what that actually is government-backed system. And inflation was intentionally built into the system. So for governments now, they have that almost invisible, well, right now it's not invisible, but almost invisible inflation tax, because whoever's closest to the money, and I know you have your gun, but whoever's closest to the money and gets it first has it when it has the most value. For corporations, the same thing is true, and corporations actually even get the money before the government gets the money. So central banks, then corporations, like banks are corporations, and then government. So for corporations, that inflation, and for governments too, but it creates what's called nominal confusion. So if you had a $20 bill 20 years ago, and you have a $20 bill today, nominally, it is exactly the same. But what it would buy you 20 years ago, heck, what it would buy you 6 months ago, and what it buys you today is vastly different. So people don't understand what's happening. And when you're talking about price stability, which the central banks talk about all the time, for the normal person, you think, well, they want the prices just to stay the same. No. Price stability is the lowest level of inflation where you, the individual, do not ask for more money for your labor.
Right.
That is price stability to central banks. So, and this whole system has been what has enabled wealth and income inequality, particularly since 1971, when Nixon removed the last vestige of gold, creating responsibility in the monetary system. And it wasn't fully gold backed. It was just, quasi gold backed. So where we are today, like everything else, there is a life cycle. For example, I'm 68. I'm at a certain point in my life cycle. My granddaughter just turned 9 or 8, one of those. Anyway, she's at a much different part in her life cycle than I am. And I don't care what you're looking at, even the earth, everything has a life cycle. So why should monetary systems be any different? And they may start out stable, but over time, especially when there are no restrictions. I mean, at least when we were on the gold standard and you didn't like it, you'd walk in with this, walk out with that. And governments had to be more fiscally responsible. But today they don't. And, this is also really simple. Okay. There is one way to fight inflation, and that's with deflation. There's one way to fight deflation, and that's with inflation. I remember in the 80s when I was a stockbroker, and I was there on Black Monday, by the way, as a new stockbroker. Best day I could have ever been in the business. It was an incredible day. It made my career. But, you see the transition. I remember the discussion of globalization. So corporations could go outside of the borders and get cheaper labor. And we went into a long period of deflation. And so to combat that, central banks wanted to create inflation, and they kept lowering after they ramped the interest rates up to actually 21.5% intraday back in the 80s. They have subsequently, every time we go into a recession, dropped interest rates, typically 5.5% to 5.75%. And what did that do? That inspired borrowing and spending and creating new money. And every time they do that, the money that's already out there loses more value. So where we are today is quite simply at the very end of this currency's life cycle. And the way that you as an individual know that is because there are really two key tools that central banks have. They have interest rate. That's probably the single most important tool that they have. And that's basically been anchored at zero since 2008. And we can see every time, this is the second time the central bank has made in this country has made an attempt to raise interest rates. But globally, every single time, no exception, every single time central bankers have attempted to raise rates above the zero, something has broken, right? Because the whole system has gotten used to free money. And so when we're looking at what happened with SVB Bank, they bought a lot of long bonds and at zero interest rate, right? And I always use this is interest rates and this is bond principles, right? So what have the central banks done? They've been lowering interest rates. And when you lower the interest rates, the market value of the bonds or the debt instruments that you hold goes up, right? So that can hide a lot of what's happening. But now that they're trying to reverse it, when you raise interest rates, what happens to the principal value of the bonds? They go down. So with SVB Bank, they were sitting on a lot of treasuries, which is the foundation of the global system. And it's supposed to be the safest thing that you can do. And it's not. And everybody should now know that, I hope. But when they started raising interest rates, and then there was started out as a mini run on the bank, they had to liquidate these bonds that were underwater. So they had to sell them at a loss. And 48 hours later, boom, gone.
So
in a nutshell.
We have what they call like a fractional reserve banking system.
Wait a minute, just a second here. No, I don't have your money here. It's in Bill's house and Fred's house.
Hey, what the hell you doing with my money in your house, Fred?
How much actual money is there? I mean, there was a time, what was it, like 10%? You had to have 10% in the vault of whatever you were lending out. Where are we at in terms of that right now, would you say?
Well, there's no reserve requirement in this country anymore. They eliminated that. So over time, what they've done is they've removed more and more of those limitations. And indeed, in 95 in this country, I mean, first of all, under President Clinton, they allowed investment risk-taking banks to merge with deposit-taking banks. Now, those had been separated through the Glass-Steagall Act since 33. So, yeah, what did we need that for? Because 1929, I mean, that's a whole nother story. And I definitely consider myself an expert on that period of time. But just to stay current, so they eliminated that, and you saw a lot of mergers between investment banks and deposit-taking banks. And then in 95, they set up sweep accounts. So when you make a deposit into your bank account, that money, even though your perception is that it's yours, no. You have loaned it to the bank, and they have the right to sweep it into sub-accounts in their name, and then they can do whatever they want with it. And so that's one big piece. It gave the banks a whole lot of money to work with. And when you sweep it, you don't have to hold reserves. So we're still technically in a fractional reserve banking system. But the other part of that is the allowance of leverage and derivatives. You brought up derivatives. Derivatives have been around for a long time. I mean, if I'm a farmer and it's January and my crop isn't going to come to market until September, and I don't know what the weather's going to do, so I don't know, am I going to have a good crop, a bad crop, etc. I would buy a futures contract. If you're going to sell in the future, you buy futures. So I would buy a futures contract as an insurance policy so that when I got to September, if I had a great crop, okay, it was just the cost of doing business, no big deal. It's an insurance policy. If, however, I had a bad crop, then that policy would pay me off so I could live to plant another season. So they've been around forever and there's legitimate use for them. But in the 90s, they started turning those contracts into speculative contracts. And the first derivative implosion was with long-term capital management, which I'm sure you know, in 98. And instead of then putting in oversight, and that almost took the whole global system down. But Wall Street and the bank and the Wall Street and the Feds went in and bailed that out. So most people didn't even know that even happened because we got to keep it out of the public eye. And then in 2000, so they tried to, Brooksley Born tried to put oversight in there. But, you know, Fed Chair Powell, not Powell at the time, it was Alan Greenspan, and Larry Summers was part of this, and Rubin was part of it. They said, no, the banks don't need oversight. They'll do it themselves. And so what derivatives really are large leveraged bet, many times, like 1,000 times leverage or more. And it's just, they move based on the price action of the underlying interest rates or stocks or bonds or real estate or what color the sky is. I mean, there's a whole bunch of derivative products that are out there, and the legacy derivatives particularly. So those derivatives that were created before 2008 are typically between two entities. So there's no market for them. And they're still floating out there. You just have to keep paying the fees so that they don't settle. But I think that we are very close to what has to be happening right now, since most of the derivatives that we know of are interest rate related in a rising interest rate environment, but it's a very opaque market. I mean, things are happening that we can't see. It's like we see SVB. Well, that's the tip of the iceberg. The real truth of what's happening is well below the surface. That's why, my whole mantra is food, water, energy, security, barterability, wealth preservation, community, and shelter, because these are the things that we need to sustain a reasonable standard of living.
Okay, we're going to talk a little bit about CBDCs in a minute, but if you could maybe elaborate a bit on the Treasury crisis, if we can call it that right now, because it appears as though the Fed doesn't have many options. As it's trying to raise interest rates, it's also playing the other side of the table with this new system where it's effectively backstopping the banks, which some people are chalking up to be another elaborate form of QE. So how do you ever get the Treasury yield back up in this type of environment, or is this just the end of the system?
That's it. And we have to go into the new system. And I mean, you can't get it back up every time they're trying because the markets are addicted to free money. And I have contended this, and I will say this probably to my dying breath. The system actually died in 2008. And then it just went on life support so they could create the new system to shift us into. And they have to get you used to it because this transition has to seem as normal as possible. So, I mean, let me ask you a question. Are things the way they were prior to 2008?
You know, it's hard to say because I was in my 20s and I was probably doing a lot of stuff I shouldn't have been doing. So I wasn't really paying attention to the markets, but, you know, things were, life was a little more challenging in some ways. Of course, technology came in but I think, like you're saying, they're hiding a lot of the inflation a lot better than perhaps they used to. You know, we have all this technology and we feel more connected, but really when you crunch the numbers, at the end of the day, you're working longer for less. The food has less nutrient value. You know, you're it seems like things are just moving so fast, and everybody's just trying to keep up with things. So I would say that, yeah, I mean, pre-2008, life was a little bit more challenging, but it was also simpler. So I don't know, what's your take on that pre-2008?
Well, I think it was when in 2008 is when the system died, and that's when we went into that morphine drip of free money. So that's probably what made it seem easier, right? Yep. Because that is how they do it, right? Yep. They give you something. If you think about 1913, and then what did we have? We had the Roaring 20s, where there was a whole lot of credit available. For the first time, there was credit available to the masses. The markets were going up. The real estate market was going up. The bond market was going up, right? And then as the population started to participate in it, then boom, they shut that credit window when, quite honestly, the industrialists, the people that understood, were selling out, kind of like Becker sold a whole bunch of stock on February 27th, the head of SVB Bank. I mean, you think he might have known something? I don't know. Maybe he did, maybe he didn't. No. I'll let all your viewers kind of determine that. But so free money, and also in the 80s. Remember the greedy 80s? I mean, I know you're really young, but you kind of heard, The Wolf of Wall Street, and what's his name? Michael Douglas played that character, Greed is Good, Gecko. Well, sure, we transitioned from at least a quasi-gold-backed system prior to the 70s into a pure debt-based system in the 80s. And, I'm very happy to be as old as I am, because I was old enough to not really understand what was happening then, but I know what it smelt like, tasted like, felt like. I was old enough that I have those memories. So it's a good thing. And now, post 2008, I mean, I've watched all those changes happen. And then post 2008, with the free money, life has gotten a whole lot more expensive than it was prior to 2008.
And I think more importantly, the system has become a lot more fragile, as we're seeing now. Yes. So they're saying that there's $620 billion in unrealized losses as a result of these diminished treasuries. The Fed is pledging, I think, $25 billion to help backstop the market. Now, I'm not a mathematician. I'm not an economist. Something about those numbers don't particularly add up. But, obviously there's the FDIC who's going to be insuring some of that. Whatever.
Let's talk about that.
Let's talk about that, yeah.
Let's talk about that, okay? Because you can go in and pull, for those that want to do this, the DIF report, which is the fund that's set up to backstop insured deposits. And the most current one takes us through December of 22. And they had about $128 billion in that fund. But that was only just a teeny weeny bit more than 1 penny for every insured dollar. Now they're saying you don't have to worry about it, because we have the DIF fund, and the DIF fund is going to backstop all deposits, insured and uninsured. And it's not going to come from the taxpayers. This is what they're telling us. It's not going to come from the taxpayers, because the banks will have to pay a levy into that. Well, there's a couple things. Number one, if the Fed is indeed, there is just no flipping way on God's green earth. That's why they have to prevent a run, that there's even enough money for the insured deposits in there, let alone the uninsured deposits. And when you're talking about the Federal Reserve backstopping it, what does that mean? Get your gun, babe, because this is what it means. And who backstops exactly? And that's fun. They're the first one I got to do that with. Yeah. But, and who backstops the central bank's balance sheet? Taxpayers. So whether you want to call it a bailout or a bail-in or whatever you want to call it, they had to. And also when you stop and think about who were the customers of SVB Bank, venture capitalists, right? So I think 97% of the deposits were uninsured.
How do you feel this current banking crisis is going to play out? Like, do you feel as though the public confidence has been recouped? And like, it seems as though there's some banks that are bouncing back today. Is that just a dead cat bounce? Or is it that people have been appeased by the Fed's plan? Is confidence
That's
in
what they're trying.
Right.
I could not tell you, Nate, that this is it. I think that the market's definitely, it's a dead cat bounce because, you know, when everything plunges like that, you're going to see that kind of behavior. But I think the jury is still out as far as public confidence. And that's another key tool that central banks have. And I've been watching over the years that confidence just going away. And once it's gone, then it's gone. So in other words, you know, it was bank to bank confidence back in 2008 when they had the interbank lending, and then banks, they stopped lending to each other. So that confidence level was gone. Then in 2015, it was the Swiss surprise. So central bank confidence. The Swiss central bank had come out and repeatedly vowed to maintain their pegged relationship with the euro. And that's a whole nother show, to be honest with you. But they vowed. And 2 days later, after they really vowed it hard, they changed their mind. So that was central bank to central bank confidence. Then in last August, and this one freaked me out. I don't know why they gave it away, but when they kept promising, meaning the Federal Reserve kept promising a 50 basis point hike, and then they did 75, the markets learned they couldn't trust the central bank. There is only one level of confidence left, and that's the public confidence in the central banks and the system. The rapid inflation erodes people's confidence in this crap, right? But what just happened with the banking system. And so the jury is still out. I can't tell you that they've gotten this confidence yet back or not, but that's why they rushed to backstop everything. I mean, 2008, they went from a backstop of 100,000, insurance of 100,000 to 250, and then it stuck. So what are they going to say? Okay, we're just going to insure every deposit. And oh, by the way, if they are, how are they going to do that? This is how they're going to do it because this is the only tool they have left. And what does that do to inflation?
Yeah. How bad do you think this could potentially get? Like, what is, people always talk about economic collapse. There's many ways that could happen, whether it's de-dollarization. You always talk about the dollar's worth, how it's been diminished. How do you foresee, like, if this bank run and a loss of confidence in the system, have you ever imagined how that might play out?
That's why I prep.
Right.
Yes. The way that it, and I believe it's already started, it's going to be in some kind, it's going to either be a hyperinflationary or hyper deflationary. And by the way, those are the same coin. It's just the opposite side of it. And that'll burn off all the debt and then we'll reset into a new system. But it's not going to be that easy. So unfortunately, during these periods of time, on average, globally on average, I mean, there's over 4,800 instances. So there's lots of data on this. So on average, 80% of the population ends up in abject poverty. In Venezuela, that number is 90%. But I didn't say 100%. This is a wealth transfer mechanism to push us into the next phase. Unfortunately, most of the time, the general public is not prepared. So it's just those in the know, like Thiel, who now is sitting on a boatload of gold, and others, right? You want to be in the right place at the right time with the right asset, because if you can hold your purchasing power intact, which is gold's most important function, then you can be in a position to scoop up those other assets when they are severely undervalued, like gold and silver is now, right? So there's a lot of pain ahead if you're not paying attention and you're not prepared. Hence my mantra: food, water, food, water, energy, security, barterability, wealth preservation, community, and shelter. And that's what I've been working on building around me. And if you're sitting in something that right now is severely undervalued when everything else is severely overvalued, that's going to flip-flop. And historically, 25 ounces of gold could buy an entire city block, buildings, and all. So there's opportunity, but it's going to be very, 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 very nasty for most people, unfortunately.
Well, it's incredible just thinking about the value of the dollar. And even when I was growing up, the cost of a home was, obviously a lot cheaper than it is today. So we have all these asset prices which are severely inflated, just like the market, that is still riding at a Shiller P ratio of higher than it was prior to the 1929 crash. How fast do you see this hyperinflation happening, and how exactly do we get to hyperinflation from where we are now, if that were to ever play out?
Well, it really is about confidence, right? So with the rapid inflation that's been happening, if you have the ability to move a purchase forward because you think it's going to be more expensive down the road, if you have that ability, you've been doing that. You've been buying those things. But unfortunately, with all of the increase in wages, actually last year, after the wage increases, after the inflation, the average person actually lost 1.4% of their income. So, we're in just a really precarious position. And I think that everybody needs to step back and say, okay, what is the true fundamental value of this asset? And the fundamental value is based upon its most important function, not what you wanted to do, but whoever created that. What was the most important thing that they wanted that to do? When you're talking about money, the most important thing, this is my opinion, but you can, think something different. But my opinion is that the single most important function of money is to hold its value over time. But what has been happening, right? Since the central bank has controlled the interest rates and the debt, and they push the interest rates all the way down, people have been forced to take more risk just to keep pace with the inflation. And where was all that QE inflation held? Stocks, bonds, real estate. That all has to reverse. What we don't know, I did an interview one time, and I was talking about this stuff, and she kind of was a little snide, and she went, oh yeah, zombie apocalypse. Well, there are zombie corporations that have been inspired by all of this low interest rate, and the banks have kept them on their book. This is a concern of mine, right? The banks kept them on their books by loaning them more money. Now, a zombie corporation has not had the ability to pay all of the interest due from their earnings, forget any principal, but they can't even pay the interest from their earnings. That's why they're called a zombie corporation, for at least 3 years. But the banks have not wanted to show those losses on the books. So they've just been lending them the money so that they make those interest payments, or at least enough of the interest payments to satisfy it. And what does that mean? That just means their debt has grown and grown. Well, if interest rates are going down, okay, it's easier to handle that debt. Once the interest rates start going up, well, then it becomes more difficult to service that debt, roll that debt over, take on new debt. And that's the problem, because this whole system is based on constantly compounding and growing debt.
So what if the Fed decides to pivot and goes back to reducing interest rates? What happens to the system then?
Then they lose control of inflation, the obvious inflation that you and I see. So that's what happens. And the faster the inflation, and there's your hyperinflation, because the faster the inflation rises, the less confidence people have in the money, the less confidence they have in the system. It's done. It's game over.
And so what happens if they raise interest rates? If they keep raising it?
They're between a rock and a hard place, aren't they? So they raise interest rates. That means that all of the bonds and the debt instruments that are out there are losing more and more and more and more and more value. Mm-hmm. And so we have more and more collapses like SVB.
So what you're saying is we're effectively screwed, and it's just a matter of time before the whole thing comes apart. It's just what is going to be the catalyst for that. It seems like they've, at least for now, for today anyways, as of 2:00 Central Standard Time, there's still confidence in the system, but that could change any moment.
Yes, and I'm not sure that there's confidence in the system. Just because the market bounces, the market bounced because they think the Fed's going to pivot. Mm-hmm. And these are traders. These aren't the general public.
Right.
These are professional traders that are just looking to make money.
Yeah, so they're not they're just in it from the day to day, as opposed to the long-term outcome of higher inflation as a result of this long anticipated Fed pivot. So what about, you talk a lot about de-dollarization as well. That's another factor in all of this with what's going on geopolitically in the world. How do you think, can we expect that people are going to start to lose confidence in the US dollar as a result of what's going on right now with the banks? I mean, in Russia right now, they're kind of poking fun at the fact that they're disconnected from SWIFT, so that they kind of were done a favor last year that they were disconnected from this system. How do you see, maybe explain what de-dollarization is? And I wanted to send you an infographic that I came across the other day. It goes through the global reserve currencies throughout the 20th century, and it shows the shift. And a lot of people are convinced that the USD as the global reserve currency is something which is just written in stone and that's never going to change. But if you do see de-dollarization, who do you think would come to replace that?
Okay, that's a great question. Number one, yes, I do see it. And I've actually seen it for quite some time, because it was December, I think 13th, don't hold me to that, but I'll probably be pretty close, of 2002, when the Federal Reserve first started buying treasury bonds. That is something that a third world nation does, and we never talked about it, did we? Never, ever, ever. But you can go on the FRED, F-R-E-D, which is the Federal Reserve Education Department, and you can see for yourself if you put in, treasuries held by the Fed. So this is actually something that's been coming for a while. And I think that it begs the question of, well, why is the world dollarized to begin with? And that was once we made the transition, just to keep a long story short, the transition in 71 from a gold-backed currency to a debt-backed currency. Henry Kissinger went to Saudi Arabia and created the petrodollar. And that means that if you are a government, a corporation, or an individual going outside of your borders to buy anything, you had absolutely no choice but to do it with US dollars. So that created an artificial demand for the dollars. That also created a lot of advantages for Americans that got to use the dollar, because we were the only country, it's not true anymore, but for a very long time, we were the only country that could actually go in the back room and print the dollars that we needed to pay our debt. So that's a huge advantage. And you mentioned the SWIFT system, which is the global payment system. We've weaponized it, right? And if you don't think the whole world watches the US dollar, you don't do what we like, boom, you're kicked out of the SWIFT system. So we've abused that privilege and we've been exporting inflation. Now, so there's a whole bunch of countries that are holding dollars, but as we've seen, Saudi Arabia recently said, we don't have to just accept dollars. We can accept rubles or gold or yuan or anything else. So that then puts us in a completely different position. The International Monetary Fund, the IMF, which is just a regulatory body that's made up of pretty much in the whole world, every central bank chief and every treasury secretary. None of them are elected officials. The IMF in 1969 created their own currency called the SDR. It stands for Special Drawing Rights, but it's just a name, just like the dollar is a name, just a name. However, what that is it is a basket of currencies. At the moment, there are 5 currencies in there, but in reality, they could put every currency in there if they wanted to. It's been around since 69, so everybody has a whole lot of it, especially in 2009. They went in and they tested all of the mechanisms for shifting out of the dollar into the SDR or any other currency. And then just recently, they injected a massive amount of SDRs into the global system. Now, you could go to your local postal service and up in the search bar, put SDRs, and you're going to find that they're inside of the system. So in my opinion, this is going to be the next world reserve currency because it makes the most sense. And, I didn't know what it was going to be, but then China in 2009, it was China who came out and said, what about the SDR? And I thought, well, that makes perfect sense. They don't have to reinvent the wheel. They just have to tweak the wheel that is already in place. So they could add every single currency in there and we would end up with a global currency and a local currency. And they have what they call a substitution fund. So if you are any other country but the US, and you could deposit whatever your dollar holdings are, and then the IMF would convert them into SDR holdings. And in theory, they could then regulate the speed at which the dollars would come back to the US.
So that would slow the pain of inflation somewhat.
Yeah, but I don't think they're going to do it. I don't think it's going to work.
Right. So yeah, there's all these dollars held out there. You have these countries who have a vested interest in the whole house of cards staying up, propped up. At some point, they get scared. Perhaps they start cashing in their chips, buying stuff with the money. How does it all work? How does it come undone?
Well, for one thing, the assumption is that they want to keep kicking this can down the road. But what if we're at the end of the road? Who do you think would know that better than anybody else? The central banks.
Yeah.
So
But they tell us everything's fine.
Well, of course, that's their job. Don't look behind the curtain. Everything's fine. Yeah, well, they worked all weekend, so I'm thinking it's not so fine because they don't usually like to work on the weekends.
Very true.
Right?
Especially bankers, yeah.
Yeah, they don't work on the weekends unless they have to.
Exactly. So it's a sign that this is definitely serious. And one of my primary concerns with the Fed is that they are, because they're so authoritative and because of just the media complacency in general, nobody's really going to question it, right? So they're going to tell us that everything is fine until it isn't, and then it's going to be blood in the streets.
Becker come out the day before they were taken over by the FDA. Said, "Don't panic. Everything is fine. Don't panic." That's how con games work.
Well, even Jim Cramer just a month before was promoting SWB as one of the best banks, top 20 banks, and was encouraging people to invest in it, and it was undervalued, and it's going to the moon. So,
have you seen Jim Cramer's discussion from his days as a trader on how easy it was to game the system?
No.
Search that out. It's very interesting. Very interesting.
Yeah.
And did you by any chance hear the FDIC resolution meeting last November where they were laughing about the fact that the public had more confidence in the banking system than they did?
Yes, that was quite telling that, all of this happens within a couple months of that meeting taking place.
Yeah.
It's...
Their job is to keep us calm. It's called, and they have a formal name for it, perception management. Because if they can manage how you perceive things, then they can manage how you move forward.
Why do you think they made that meeting public? Like, why would they ever?
That's a good question.
Why would you make a meeting like that public?
Well, I think it has to be public, but knowing that it's public, why would you make those statements?
Yeah, because clearly they don't have faith in the system that they're trying to alter the perception of us to have faith in. So, yeah, it's very disconcerting to say the least. So obviously people are trying to protect themselves against what could potentially be coming down the road. Gold and silver are obviously some of the things that you promote. You have a team that assists people with giving some strategy on how to navigate these precarious times.
I've been studying currencies and currency life cycles since 1987, and there are very simple, repeatable patterns. And even though I can't guarantee what's going to happen tomorrow, I'm kind of thinking that if we're doing the same thing, we are most likely get the same result that has happened 100% of the time in over 4,800 times. I mean, maybe this time's different, but I don't think so. And so that actually makes it pretty simple to, number one, understand where we really are inside of this cycle, and number two, how to get into a position to benefit from it. I am an economist first, and it was because in 2008, I was getting ready to retire. And I had a little 2-bedroom condo that I could just lock up and go wherever I wanted to and be done with it. And then 2008 happened. So I bought, it's just a half an acre here. It's just a half an acre. And I'm not a gardener by trade. I'm not a prepper. I mean, that wasn't my thing. I am absolutely a prepper now. Yeah. But I believe my research because I know how deeply I dig into this stuff. And I know that I'm going to the horse's mouth. So I bought this property because it was big enough for my children, my family. And I said, okay, I got to figure out how to grow food for 20 people. But now it's much larger than that because I took out all the grass and I have an urban farm. And this is some of the produce from my farm. So I definitely can eat and I can have lots to share. But in April of 2020, there were riots really near my house and also near my children's house. I live in dead central Phoenix, so I live in a very urban area. And there were riots in both places, and I thought, there's the hole in my strategy. So I went out and I bought, I have 41 acres on the top of a mountain.
Nice.
And putting up hothouses, I mean, it's a great piece of property. It's completely off grid with solar, with water, with all of the mantra pieces, and the food part is getting finished like as we speak. So what was the question?
Yeah, no, I think that's great that you're prioritizing those things, because you get a lot of, and even I was talking to Peter Schiff about this. That's one of his. I trust people more when they have those bases covered. Like gold and precious metals are kind of secondary to having a means of self-sustainability if things begin to get very difficult. But they're a way to preserve wealth, obviously. They're a way to help you thrive and potentially rebuild out of the ashes. So,
well, even in a better position, right? Yeah. Remember, this has happened so many times before. And when I first became a stockbroker, nobody ever talked about outliving your savings. Now they certainly talk about that. So this is actually a way to build wealth. I mean, I'm 68. At some point, I don't know if I'm ever going to retire, but at some point I might want to start, or I might want to stop working this hard. So I'm always going to have a need of income. And this is opportunity positioning as well as all those other things, because this holds wealth. It holds a store of value. And here's the other piece of that. It's how they do those overnight revaluations. They take this garbage that has no intrinsic value and they reset it against gold that is all intrinsic value. And the reason why gold is all intrinsic value is because it is used in every single sector of the global economy. So it has the broadest base of functionality and the broadest base of buyer. So when you're going into a fight like this, what do you want? You want something that has no value and is going away? Or do you want an arsenal?
And so how do you have any advice on storage of precious metals? Is it just like bury it in the back 40, or is it put it in a safe in a bank somewhere? Is it, no, what do you recommend?
Not that one.
Not that one, yeah.
Not that one. But if you don't hold it, you don't own it, regardless of your perception. So, there are lots of different ways that you can store it depending upon your circumstances. And obviously, I have kind of fewer choices because of how visible I am. But before I was visible, there are so many hidey holes in your home. Like, for example, that 2-inch kick plate underneath your pots in your kitchen, that's dead space. I had those bottom shelves removed and they became just removable shelves, right? They put notches where you can't see. Yes, you have to move your pots and pans when you want to get to your gold and silver, but who's going to think that you have gold and silver there? So you have to be a bit creative. Right now, I have to hold mine in a private vault, not a bank vault, because a bank vault can close you out and a private vault holds a lot of different things. So it's safer, and also being diversified inside of that. I know a lot of people like to hold their gold offshore, but if you hold it offshore and you need it, you might not be able to get your hands on it. So, and there's different kinds of gold and different kinds of silver for different kinds of functions. So like this for me is barterable. And by the way, this is a sterling silver chopstick, which is 92.5% pure, right? So there's all different ways that you can hold your wealth. You think about India, where, they wear their wealth on their bodies. So you just have to see what's right for you. But silver for me is barterable. Gold for me is about preservation and opportunity and dynastic wealth. Wealth that I can pass down to my family is critically important to me too. It's not important to everybody, but it is to me. So that would be more rare. So I'd say, like in the strategy that we were talking about, based upon those repeatable patterns, we start with your goals. What are you trying to accomplish? What are your means? What do you have to work with to accomplish that? And then you build the portfolio of the different kinds of gold and the different kinds of silver that supports your goals.
And in terms of, I've heard that some people recommend jewelry because if you ever did have to barter, you know, if you had gold coins, people might think to themselves, oh, this person has a lot, right? See, as a personal security thing, have you considered jewelry as a potential method of barter as opposed to utilizing coinage?
You think I'm wearing, but it's a much larger markup.
Right.
It's much, much larger markup. Mm-hmm. So it's a combination, but I definitely am overweighted here. I mean, this is where, without a doubt, I hold the lion's share of my wealth because it's also easy to travel. I mean, I'm not recommending anybody get a 1 ounce coin for $8 million. However, you can, and you could put it in your pocket and you could travel anywhere in the world with it. There is a market for it. And if you go through TSA or whatever, they don't know this stuff. They look at a $20 face value.
Right.
So, yes, I definitely am a proponent of jewelry. I like jewelry. I've given jewelry to my daughters since I started them at 12. And, you know, gold. And when I travel, I put chains underneath my clothes. So I take silver and gold chains with me. But the lion's share to execute the strategy is most definitely this and this. But it's also chopsticks or Aunt Bessie's sterling silver salt and pepper shakers or sterling silver jewelry. Sterling silver is 92.5% pure. 925 silver is 9.5% pure. So 14 karat, 18 karat, you know, but I definitely do most of it in coin form, but I definitely do also do jewelry.
What is your price prediction? I hate dropping this question on people because it kind of puts them on the spot, and really for me, I've always thought that the price of gold is somewhat irrelevant, especially considering it is, I think we've passed peak gold production, supposedly. So by 2030, it's supposed to dry up a lot. So that only means that it's going to go up in value. But when we're weighting it against the US dollar, we have to be careful. People get excited about a $3,000 price point. They forget that, well, does that mean that the value of the dollar is eroded that much? But if you were to maybe throw out a price prediction for gold, what would that be and when would it hit that target?
Okay. So if we're talking about like if they were going to do an overnight reset tonight, right? Yeah. So what they want to do is the price of gold in terms of dollars has to go up to cover a number of dollars that they have created out there. So if they had to do that tonight, it would be easily in excess of $15,000 an ounce. Now, recent examples of it, you know, Lebanon, because a rising gold price is an indication of a failing currency. So they artificially suppress it with paper gold, of which there's an unlimited amount, right? But when they do the reset, that's when the rubber hits the road. So tonight, I would say at least $15,000. In Lebanon, I think the overnight reset, it went up like 1,300%. In Venezuela, the first reset that they did, and then it's been going up from there, was like 3,500%. So I can't tell you what that coverage is going to be, but at 1,900, it's a bargain. And silver, I mean, please, it's a bargain.
And what are your thoughts on cryptocurrency? Are you a believer in Bitcoin? What do you think the the rush into Bitcoin in the last few days, like it was down a lot. Now it's up like 20% almost in just a few days, I think.
That's also based on the Fed easing. I read the 1996 NSA white paper on how to make a mint. And have you read that?
No, I haven't. No.
Oh, it's pretty interesting. And you'll see a lot of things that have actually come to play in there. I don't personally think that it's coincidence that Bitcoin was introduced in January of 2009 and quantitative easing was issued in March of 2009, because the last thing central bankers want you to do is buy gold.
Right.
So I know that there's a very loyal following for Bitcoin, but this is the test. And the test isn't what happened today for it to bounce. It has really never gone through this. Now, I do know that the Bank for International Settlements in their money flower has a little teeny space in that flower for private cryptocurrencies. And we've certainly seen Wall Street adopt this. I mean, otherwise we couldn't even have, I think it's quite interesting who they're choosing to bail out this time. And again, I go back to that's because it benefits them that they're bailing out all these tech companies, et cetera, and venture capitalists. So I am not personally a proponent because I think that it was just a tool to divert people away from buying gold. It's the same kind of mentality. People are trying to go around the system and get away from central bank control. But this is a lot less visible and a lot less accessible. So for me, I'm going to wait and see who survives this debacle. I'm happy to wait in my gold and silver and my food, water, energy, and all of that. And then after the dust settles, same thing with stocks. I don't own a stock. Now, that's not always been true, and I don't expect it to be true always into the future. But I would look at it because it is a handy way to move a lot of wealth. You can put it on a thumb drive and take it somewhere. But I have yet to have one person explain its functionality other than that.
Mm-hmm. You got to have a conversation with Michael Saylor, probably. He seems to have a lot of ideas with respect to it. But one thing I find, and I never really put those two things together, what you just said, it made an appearance right after the Great Recession. And it made a very mysterious appearance at that. We don't know who made it. Some mysterious Satoshi guy just came out of thin air, came out of nowhere, and all of a sudden, it wasn't all of a sudden, but, suddenly people started to pile in. And it certainly makes you wonder what it's all about, right?
Yes, it does.
Yeah. So I think the tried and true way to go, you said something that, if this has happened 100% of the time in the past, then we should expect it to happen again. There's always this exceptionalism that we find when we're assessing our current situation, and every generation thinks that they're unique and they have it figured out, and this time is different. And don't listen to the Warren Buffetts and the guys who are saying what we don't want to hear because we're different now, we're more evolved, right? But I think time and time again, I'm sure at some point we're going to get to a point where ones and zeros are going to be the dominant form of currency, but I don't think we're quite there yet. In fact, I think that we probably need to sort out a lot of the geopolitical stuff first, and who knows where that's going to go. Do you have any thoughts on just the state of affairs between China, Russia, United States?
Well, I can tell you one of the things that happen 100% of the time around currency regime shifts is war. Mm-hmm. And I'm not really convinced in my mind that that's them and this is us, because I'm not convinced that they are trying to kick the can down the road. I think they're more trying to create crisis to get everybody's buy-in. And if you look at what's been happening, we've been going from crisis to crisis to crisis to crisis, keeping everybody off balance.
And lastly, I think I'd be remiss if I didn't ask you your perception of the supposed Great Reset. and what the role of the notorious World Economic Forum is in all of that. What is this great reset we keep hearing about, and how does it relate to what we've already talked about today?
I've actually been talking about the reset since 2009 after a half an hour interview on Bloomberg News, which isn't there anymore, with Christine Lagarde, who was the head of the IMF at that time. And she used the term reset. We need to reset the financial system, reset this, reset that, about 28 times during that one interview. And I went, holy crap, we have entered the period of reset. And what that is resetting us, taking us from one monetary and financial and social system and resetting it into another one. These are very, very, very painful moves. And this is a huge one. And that's why it's so critical to be prepared. That's why I've done all of this, to be prepared, so that we can make this, everybody, no matter how prepared you are, we are all going to feel this. It doesn't matter. However, we have a choice and we have an opportunity. When you're talking about the World Economic Forum, what did they say? You will own nothing and be happy, except wealth never disappears. It merely shifts location. And so the goal of the elites is to have more of it shift their way. And then guess what happens if you are now renting everything, right? Who's going to dictate that price? And oh, by the way, I think I haven't had time to go back in and look and find this. I think it was a 2015 IMF article on the transition where they talked about with the autonomous driving and with all of this smart contracts, so, on your houses and what have you, that if you miss a car payment, the car can lock you out and drive itself away. And guess what? Ford just came out with that patent, applying for a patent to do just that. But don't worry, they don't plan on using it.
Of course not.
So we have an opportunity, because the reality is we vote with our wallets. We vote with our purses. If you buy stocks, that's your vote. If you stay in currencies, that's your vote. Here's my vote. This is my vote. And this basket of food, this is my vote. And if we all got behind that and voted it, guess what they couldn't do? Because there's a lot more of us than there are of them. You look at what's happening in Nigeria, and they only had 0.5% of the population that adopted their CBDC. So now they try to demonetize. In other words, if a government says this is money, they can also say, no longer money. And so they were trying to demonetize most of their currency, which India did in 2016, and Venezuela did, et cetera, et cetera. That's where we're headed. So you have a vote. You vote with your purse. If you're going to prep, that's your vote. If you're going to buy gold and silver, that's your vote. If you're going to stay in these markets, that's your vote. I vote for independence and community. I mean, community is arguably the most important part of it, because one person can't do it all themselves.
And I would venture to say that it's not necessarily all or none either. Like a person could play the CBDC game when it comes around, but at the same time, hedge their bets with what you're talking about today. Is that not possible?
Yes, it's highly possible if we have no choice, right? If the CBDCs are legalized as our tool of barter and what we have to work with, then we're not going to have any choice. But what I had originally intended to do was convert a chunk and you'll know when we're on the other side of this, you'll know, because they'll put a component of gold into the new whatever it's going to be. Because they're going to need to regain your confidence. So that's what history tells us they're going to do. So, but I had intended to put probably a little bit more, or a chunk of my gold and silver converted into the new currency. Not going to do that. I'm going to convert it as I need it, right? But other than that, I'm going to hold it in here because one thing they say is once they have the CBDCs, there are no limitations on how low they can push interest rates. They already have all your purchasing power. You put up that chart. Now they got to attack your principal. Once they've done with all of that, we're reset into a new system. And if you don't fight back, if you don't prepare on every single level, what choices do you have? You are giving up your freedom. You are giving up your choices.
Absolutely. Well, it's been a very fascinating conversation with you today, and I hope to have you back. We'll see how this plays out in the coming weeks and months ahead. It all could crash really quick, and then in that case, we'll have to get you on much, much quicker. But where can people best find you on the internet?
Well, I have 2 YouTube channels. So I have the one on ITM trading where I try and explain all of this very complicated stuff. And then I have Beyond Gold and Silver, where we talk about all the rest of the mantra and we try and meet you wherever you are. So if this is new to you, okay, here are simple things. If you're a master, come join us and help teach other people how to do it. And also for the variety of circumstance. We have a website, itmtrading.com, and we actually love human communication. So you can always call us at 888-696-4653. We're active on Twitter, on Instagram, on TikTok, on Facebook, and we do podcasts. So we're out there a lot.
Yeah, I would encourage people to take a look because you really do have a knack for making these very complicated topics. I know we've went a little deeper than I thought we would today for some things, but for people who are not very well versed with economics, you do make it easy to understand. And I think that's why you're trending so well right now. I know a lot of people are using your clips in various videos and they're getting hundreds of thousands, millions of views. So yeah, no, it's good. So just keep it up and go check out her channel, guys. And if you have any questions for Lynette, post them in the comments section below. And then when we get her back on, we'll be sure to ask. Thanks for coming.
I look forward to coming back. This was fun.
And last but not least, one more. Looks like my camera guy's going to be doing some cleanup after this.
I know, poor Edgar. This is part of his job all day long.
Picking up fake dollar bills, just like working at the Fed, I guess, eh?
Yes, indeed. You want real money? This is real money.
Awesome. Good stuff. Well, thanks a lot for coming, Lynette. Appreciate it.
Pleasure. Thanks for having me. Bye.
The best way to support this channel is to support yourself by gearing up at CanadianPreparedness.com, where you'll find high-quality survival gear at the best prices, no junk, and no gimmicks. Use discount code PREPPINGGEAR for 10% off. Don't forget, the strong survive, but the prepared thrive. Stay safe.